this. Okay, sorry for that. So here is other block, and we have an inefficiency here. That's fair value gap BC. Buy side inefficiency, sell side imbalance. Buy side inefficiency, sell side imbalance. After we took out the high of Friday last week and the high of previous day, that is Tuesday high, we break below, created a fair value gap here. What you are looking for, what you're looking after is a high to be taken. That's a buy side liquidity or sell side liquidity. Once a liquidity is taken, you wait for a fair value gap to be formed like this at the time of the day. This is a fair value gap. It's a starting spooling point where a macro start to spool. That's the price movement start to spool. You can see the price action there. Here is 9 o'clock. Between 9 o'clock to 9:30 opening price, New York opening price, deliver inside an inefficiency. It's a high probability during the 9:30 opening price. I wanted us to be live and witness it, but you guys did not plug in, but it's okay. So at any opening price, that's a key zone, New York key zone opening price. You look for if price deliver inside an inefficiency already, like the opening price open and inside an inefficiency like this, and we have taken a liquidity like a buy side liquidity resting above like this and a previous high. Once price trade inside the inefficiency at the time of the day, what this candle is 9 o'clock, is 1 hour chart, is 1 hour chart. So between 9:30 to 10, that's when price deliver inside this inefficiency, this CB, sell side imbalance, buy side inefficiency at the time of the day. Deliver inside open at 9:30, then you look for next draw on liquidity, next draw on liquidity, and we have an inefficiency here. These are inefficiency. You can see there. That is BC high and BC low. You want to see price break below it, then coming to take this sell side liquidity resting below here. And we have Friday low, which price is coming to take. Since we have taken the Friday high, the Argo engineer price coming to take the Friday low. It might not be today. Here is a low. Friday low. That's sell side liquidity. If you want to enter a swing trade, enter from here, then put your stop loss above here. Then you just have patience for it to play out, taking this Friday. It's coming to take this Friday low. Since we have taken the high already and took out the Tuesday high, that is the starting schooling point, which is a fair value gap. That's why it's good for you to always enter at inside fair value gap. Enter if you want to enter a trade, make sure you enter inside a fair value gap, other block, a breaker. All these are PDA are strong major support or resistance level. Then you can put your stop loss above here, the candle that took out the Friday high. Then take profit at the Friday low. It will take price will take in time before you deliver here. It might be tomorrow or today is Wednesday. So going to Thursday, Friday, we like to see price first. This is the minor sell side liquidity, which you will first look, take your profit first. Minor sell side liquidity. Here is your first take profit at this is a sell side liquidity. We have taken a buy side liquidity, taking the previous day high. Then we break below. There is a breaker. There is a candle that break below it. 10 o'clock candle break below. You can see the bullish candle, the last close candle here. We are not able to trade above because here is a breaker. We are break below. We are breaking below now. This is a break of structure. That's what you should be looking out for. Is a break of structure. As market shifting structure. Market shifting structure. That's what you look out for after a liquidity is being swept like this now. So you wait for a break of structure. Once there's a break of structure, then here this last close candle here is the breaker. You can see the 15 minutes chart. That is 15 minutes chart. You see the breaker here, 15 minutes breaker. This bearish candle here. That has been the last bearish last close candle before we break below it. This candle is higher than this low. This low is higher than this low. So this candle here as a bearish candle is acting as other block. This is the candle, 10 o'clock candle that break below it. It's now acting as a breaker block. You can see price trading inside the breaker block. This is the breaker high. Hope you are seeing my screen.
Yes.
Yeah, here is the breaker high at the high of that bearish candle. Breaker high. You can see the price reaction there. It's a major support, sorry, a major resistance at the high. Only the wick is touching the high of the breaker. Trading inside the breaker, you see we break below. There is a breaker low at the low of that bearish wick. You include the whole candle body, both the wick and the body is standing as a breaker, a bearish breaker, because we are selling, market is selling, that's bearish breaker. If it's a bullish breaker, that's up, it's a bearish breaker, that's breaker low at that wick. Low. You get the 50% of this breaker, it's something where you get the 50% of any inefficiency. Use your Fibonacci. You can anchor your Fibonacci by now, I think so, I believe. So you anchor as a bearish breaker, you anchor from the high to the low. At that line there, the 50%, that's the consequent encroachment. You can see the price reaction there. The 50% of it, you can see this is the weak, touch it, is weak. Half of it is acting as a major support level. That's the 50% of this breaker. Here is the breaker high, breaker low. Where is the breaker low? The low of the bearish candle. At that low of that week, at that low of that week, that's the breaker low. So you are measuring from the high of the breaker to the low of the breaker to get a 50%. That's the consequent encroachment of any inefficiency, which is this blue line here, our Fibonacci 0.5. This is how you set your Fibonacci. That's 0.5. If I off it, it will not show up. Then if I on it, it's showing now. The blue line there, that's what you're seeing. That's the 50%. You can now annotate it. Then you can now remove it now. So here acting as our breaker 50%, as consequent encroachment. can put it at the middle there. You can see the real price action in 15 minutes now. We are trading inside the breaker. We are break below it. We have an inefficiency here. After a breaker, price created a fair value gap between this candle high and this candle low, going into 2 to 3 p.m. silver bullet. So we like to anticipate price this fair value gap to act as a resistance, to act as silver bullet, the PM session silver bullet. That is the inefficiency there. This is an inefficiency. This fair value gap BC, buy side inefficiency, sell side imbalance. Since we are in a higher time frame like 15 minutes, it will be a major resistance. Then if price break above it, it will act as a inversion. It will act as a resistance. Now, if price break above it, it will now stand as an inversion. Hope you understand what I said. Until price break above it, it's still acting as a resistance. CB, set side imbalance, inefficiency, sorry, set side inefficiency, buy side imbalance. It's going to act as a resistance. But once it's violated, once price violates it, that is trade above it and close above it, then price coming retesting to it again, it will act as an inversion. During the 9:30 opening price here on 15 minutes, you can see we open inside an inefficiency. This is 15 minutes inefficiency. This is 9:30 opening price. At 9:30 opening price, we have a high above here. At 9:30 opening price, the algo will seek for a liquidity first. That's the liquidity. The buy side liquidity resting above. Here is 9:30 opening price. 9:45 going to take this buy side above. After you swept, took out the buy side, here's an order block, last close candle. Order block, last close candle. Order block, last close candle, because we are selling, that's bearish. So we are looking at every last close candle to act as a order block. This bullish candle is higher than this. This bullish candle is higher than this. That one makes its order block. Every last bullish up close candle will now act as order block. Still trading inside the inefficiency. You can see the inefficiency here, the CB is acting as a major resistance. That's a premium level. That is a premium level. That is it going to a discount area, which is the breaker. The breaker, we are break below it. So that's where you seek for. Price will seek for liquidity. After taking the high of Tuesday, this is the Tuesday high. That's it. Swap it. We break below a structure. This market shifting structure. Is there any fair value gap? Yes, here's the fair value gap. Time of the day 9:30, deliver inside. There has been a consolidation here before the 9:30, but still trading inside the inefficiency. So you target the next draw on liquidity. Here is a liquidity. You can enter here and take profit here, below here. Okay,
Yeah.
that's what I wanted us to look into. So is there any question? You have to look at your chart and see this as it plays out, then practice it too. So it's not something you just close your chart after the class. You have to go over it. It's gold. You're on gold chart. So you can check it on your chart, you will see it. The algo seek liquidity. Price go up to seek for a liquidity, or you go down to seek for a liquidity, or inefficiency. That's what moves price and nothing more. It's just purely price action because this is algorithmic trading. It works with price action. So once a liquidity is taken, you look for the next draw on liquidity. You just have to have narrative of where price is going and what price is doing in a higher time frame. Higher time frame, you can see this 15 minutes. You can go to weekly higher time frame. We have been bullish on gold for some weeks now. We have been bullish. Going to daily, you can see different price action. So this daily now, daily chart. This candle is today, that's Wednesday. The high of Tuesday have been taken. This is the low of Tuesday. For me to take this minus sell liquidity, which I had learned at 15 minutes chart, still go back there. If should price close as today being Wednesday, this is the candle of Wednesday, close maybe there or lower and creates a fair value gap here. I would like to see a fair value gap for Thursday price to deliver inside it, then take out this minus sell liquidity. Once a price creates a fair value gap here, I will be anticipating price going long on gold. We have a low here, we have a high. This is a breaker. This candle here is a breaker block, and we have a lower low that took out the high here. By body, the body will tell you the narrative. This body is higher than this. That one makes it a breaker. So we like to see a fair value gap because once there is a breaker, you always anticipate a fair value gap that follows it up. And once price creates a fair value gap, the fair value gap becomes a high probability. At the 50% of it, that's the consequent encroachment. At the consequent encroachment, that is where you are anticipating price to reach out for. Then you can, if you can have patience, maybe to reach out at the other block. Here is an other block now, last bearish close candle. To reach out for the other block main threshold, then you can put your stop loss maybe below here, then take profit. Maybe you measure out -2 standard deviation. This is how you measure out standard deviation on your Fibonacci. Just click it. Yeah, you double click it. This is your standard deviation. How you Our next class we look into it. Standard deviation. We have standard 0 -0.5, -1 standard deviation, -1.5 standard deviation, -2 standard deviation. All this, it will see them. That's how standard deviation up for your take profit above. Then going to 1 hour, sorry, 4 hour chart. This is how you analyze your market from higher time frame to lower time frame to see a high probability, not just on one particular time frame like that. You have to toggle from higher time frame to lower time frame to see what price is doing. That will enable you to anticipate price action. Then you make money, and that's the main thing there, to make money there. Yeah, on 4 hour we have an inefficiency here now, which price have delivered into. I see the inefficiency here. I see this is an inefficiency. I see price have delivered
What's
into.
making it an inefficiency?
Yeah, it's a gap. It's an inefficiency. It's a void, like a space. You can see this candle. That's Tuesday, 18th February candle. The low of it and Tuesday 18th February by 2 p.m. The high of it. Between this low and this high, you can see there is no candle close there. It's just this candle body. There is a gap there which there is no candle that deliver inside it or close to it apart from this current price now, this live price that have delivered inside it. Before this price deliver inside it, there are no other candle that have delivered inside it. So it's an inefficiency. Now we have delivered inside it, it's complete, it's efficient now because price have delivered to complete it. So what next? It will now continue its direction to where it's going. It's like when you are painting a wall, there is a place you need to retouch, then continue. That's what made this an inefficiency. It's a void, a gap. You can see the gap there between this candle low and this bearish candle high. That's the low of this week and the high of this bearish candle. Between this low of this bullish candle and the high of this bearish candle, can you see the space there, the gap there?
Yeah.
Yeah, it's a gap, it's a space. That's what makes it an inefficiency. It's open, it's a void. Before the price now deliver inside the bin today, it's Wednesday. Today is Wednesday. This is Tuesday. This is Tuesday. So on Wednesday being today, price deliver inside this inefficiency, that BC, buy side inefficiency, sell side imbalance, the high, then buy side inefficiency, sell side imbalance, the low. You can see price have delivered inside. To get a 50% of it, you still use your Fibonacci. By now, you know how to anchor with your Fibonacci. I hope you have set your Fibonacci.
Yeah.
Yeah, you have to set it. So you anchor from the high, that is the low of this candle. This is the candle that created a fair value gap. After a push up, price went up. After this candle went up, this is the candle that created a fair value gap. So you are anchoring, you are measuring from the low of that candle, which is here, the low, to this high. That's a 50%, the line there. You place it exactly at the same line. Yeah, it has rhymed. You can remove your Fibonacci, then you are not 30. That's consequent encroachment. BC, consequent encroachment. That's a 50% of that inefficiency. 50% of the inefficiency. This is the high of the BC and the low of the BC that deliver inside it. Is that clear?
Yeah.
Yeah. So that's for today. Is there any question?
Not really for
Yeah.
now.
Just want to be taking it gradually, gradually, so that everything will not be complicated. If any question, you can ask or in the group too.
No problem.
Yeah, you just go to your chart, you will see it there, you see it by yourself, you practice it, you look for the previous day high and previous day low. Then once price take out the high, which is the buy side liquidity, then you go down to your lower time frame to see a price action, a break of structure, a displacement, then a fair value gap. You look for the next draw on liquidity, which is sell side liquidity. You take your profit at liquidity, then wait for another setup. There is always opportunity here, a lot of opportunity. It's just time of the day. Make sure you trade with time of the day. Then that's it. And no emotions. Once you enter a trade, you just leave it, let it roll. Okay,
Yeah.
that's for today. If any question, you can ask on the group. Okay.
Yeah.
Thanks for showing up today.
All right.
Okay. Be safe.
Good night.
Good night.